Hello and welcome to this weekend update. Today is 8th of April 2023. You're looking at a daily chart of S&P 500 futures. Today I'm using the S&P 500 futures because the cash index was closed on Friday, but the futures were open but closed early. And on Friday, the Labor Department released the non-farm payroll report, and the futures basically captured the reaction after the release of the report. So I want to use the chart that has the latest information. So let's talk about the report and see why the market reacted the way it did. So this is showing the report. The unemployment rate came in at 3.5%, which is below expectation. Last month it was 3.6%. So basically, this rate dropped. This is now at an historic low level. It shows that the labor market is still very strong. The economy added 236,000 jobs, which was pretty much in line with what the market was expecting. This is another important metrics, which is the average hourly earnings. It was up 0.3%. That's exactly what the market was looking for. But in the previous month, it was up 0.2%. So this was an uptick from the previous month. Now, let's look at the trend in some of them just so that we can understand. So let's look at the average hourly earnings. So if I just go to the average hourly earnings detail, so this is basically what's been happening. So if you look at the last 8 months or so, you can see that it's been hovering somewhere between 0.4% and 0.3%. So if you take the average of 0.4 and 0.3, which is 0.35, that translates to around 4.28%. So if you take the average over the last 8 months of what's happening, and the fact that the average hourly earnings have been going up somewhere between 0.3 and 0.4, if you just take the average, that equates to roughly 4.28%. Now, 4.28% is well above what the Federal Reserve is looking for. They're looking for average earnings, wages going up closer to 0.2%. 0.2% basically leads to around 2.42% on an annualized basis. So it's a little bit above expectation, but very much in line with expectation. So that's the average hourly earnings trend, unemployment rate. So overall, I would say that this is a more friendly report to the market. The reason why it's friendly is because the labor market is still strong. It's creating jobs, but the average hourly earnings have been coming down. If you look at the year-over-year trend, if I show you the trend, you can see that on an annualized basis, it's been coming down. It was at 5.8% roughly a year ago. Now it's at 4.2%. Still well above what the Fed would like to see, but you can clearly see that the trend is to the downside. And I think that's why the market actually reacted positive to this report. You can see S&P 500 closed up about 12 ticks. Dow reacted, that was the best, not Dow, the Russell 2000 was the best, the best performing index. It was up over 1%. We'll talk about this in a second. So let's go through S&P 500. As I said, the early reaction was positive. Now, if I look at the pattern, so the pattern is clearly on the upside. After this decline right here, you can see that it's gradually moving higher. You can see that it's making a series of higher lows. After forming a low here, you can see this is a higher low. This has the potential to become a higher low. So the short-term, trend is up as it's making sequence of higher lows. Now, if you look at the moving averages, just to see where price is in relation to the moving averages. So let's just zoom it out so we can see. So you can clearly see that the price remains above the daily 200-day moving average, the daily 20 and 50 EMA. It remains above those moving averages. You can see the short-term trends, which are which are shown by these two moving averages. It's starting to move higher. And you can see long-term moving average, which is represented by this 200-day, it's also starting to move higher. It has bottomed somewhere in here. You can see on a daily basis the number keeps going higher. So the price action clearly shows that we are now currently on an uptrend. If we look at the momentum indicators, you can see that MACD has crossed above the zero line and it's moving higher. RSI remains above the 50 level. So the momentum indicators are also positive. So the price action, the momentum indicators on a daily basis remains positive. So which basically means that odds of higher prices is better than lower prices. If we look at the weekly basis, so let's get rid of the so on a weekly basis, I would basically say that it's still stuck in a trading range. So let's look at the weekly right here. You can see that it remains in a trading range between 4,200 and 3,800. So that hasn't changed. But weekly momentum indicators are positive. You can see RSI is above the 50 level and MACD remains above the zero level. So on a weekly basis also, both the price action and the momentum indicators are more positive than negative. So that's as far as S&P 500 is concerned. If we now look at NASDAQ, just to see what the technical picture looks like. So this is NASDAQ. NASDAQ was up almost 23 points after the unemployment report came out. So again, you can see that series of lower highs being formed, low right here, higher low. This has the potential to be a higher low. You can see the higher highs being formed. So on a daily basis, you'd have to say that this is on an uptrend. If you look at the momentum indicators are also positive. MACD is above the zero line. RSI remains above the 50 level. On a daily basis, this looks more positive than negative. If you look at the weekly, so let's look at the weekly chart right here. This is NASDAQ 100, which is the NASDAQ futures. You can clearly see that even on a weekly basis, it's making series of higher lows right here. It has now recently established a new swing high. This week it gave us a indecision candle. But if you look at the momentum indicators, RSI is moving above the zero line. This is positive. This is MACD. RSI is above the 50 level. So, both the price action and the momentum indicators remain positive on NASDAQ. So that implies that probability of higher prices is greater than lower prices going forward. So that's NASDAQ. We'll come back and talk about the levels. If we look at Dow, this is Dow. So if we look at Dow is also making a very, it was up 87.0.26%. So Dow is also, Dow has been gradually moving higher. So if you look at Dow right here, and then Dow closed right at this level. This was the previous resistance zone right here. So Dow is now consolidating right at that level. It used to be the previous support level right here. So Dow has a decision to make whether it's gonna break out to the upside. But you can see that the price action is definitely looking better. RSI is above the zero line, above 50 level, and MACD is moving higher. So on a daily basis, Dow looks, both the price action and momentum indicators are looking positive. If we look at Russell 2000, so this is Russell 2000, which is the last one I want to focus on. Now, Russell 2000 actually reacted quite positively. It was up over 1% on Friday. Even though the momentum indicators are weak in Russell 2000, but I'm beginning to see perhaps some improvement. You can see that RSI is gradually moving higher. MACD is also moving higher. On a price action, if you look at it, although you might say that this looks more like a bear flag consolidation, I won't disagree with you. But at the same time, if you look at it, after forming this low, there is a potential to form a higher low on a daily time frame, especially because it has formed a higher high. So this high is now higher than this level. So given that, there is a potential for a change in trend after being in a downtrend right here, where it made series of lower highs. But you can clearly see, higher high, and then this has now the potential to become a daily higher low. So maybe there is a change coming. So I'm going to talk about some of the levels shortly. But looking at all the four major averages, at least for next week, I'll be watching the small cap space. Maybe look for long opportunities in this area. Of all the major averages, to me this one looks to be the most interesting. Now let's come back to what are some of the levels we should be watching out, or what can we expect from the market next week. Now next week we've got a key economic report coming out. So we're going to get the CPI report coming out on Wednesday. This is, Wednesday. So let's just have a quick look at what can we expect. So if we look at the headline CPI number, so last month it came in at 6%. This month, this is basically for the month of February. So we're going to get the report for the month of March. In month of March, it's supposed to come in at 5.2%. You can see that there's a big decline from 6% to 5.2%. If the number comes in line with what the market is expecting, that would have to be a big drop. There's no question about it. And if it drops to 5.2% by the end of March, by the end of second quarter, we might have a 4 handle on the headline CPI. So keep an eye on this one, because if it drops to 5.2 at the end of March and we have a 4 handle by end of, say, second quarter, then I think people are going to pay less attention to inflation, even though prices in the supermarket and everywhere else is still going to be, quite high. But I don't know that the market is going to pay too much attention to inflation as they did in the past, because if you're at 5.2, which is still way above what the Fed is, wants the inflation rate to be. But by second quarter, if you get a 4 handle, then by the end of the year, we might be looking at a 3 handle, the rate at which it's falling. If you look at the trend, so let's have a look. So this is the trend. You can clearly see that since it peaked at 9.1, it's been gradually moving higher. And if we get 5.2, now we're in the 5 handle. And then by the end of the second quarter, we might have a 4 handle. So that basically means is that Federal Reserve may be coming closer to the pausing. They've got a meeting in May. There is a 50-50 chance that they will increase interest rate by 25 basis point. But if inflation continues to drop like this way, then definitely there is a argument that could be made that the Federal Reserve may pause after the May meeting. They may not do anything in the May meeting, but even if they do, it would be 25 basis point, bringing the Fed funds rate to 5.25%. And at that time, they might say, we're gonna pause and leave it there. Not cut it, but pause and leave it there and see what happens to inflation rate. So this is one I wanted to look at. So this is one measure we need to pay attention to. The other one is the core. You see, the core overall is expected to remain tick up a little bit, but pretty much flat. But on a month-over-month, the core inflation is supposed to, where is the monthly core? this is the year over year. I wanted to see what the monthly core is. It's not. But if we look at the monthly CPI, which is expected to come in at 0.3% right here, it was at 0.4%. So let's look at this one a little bit and see what the trend is. So if you look at it on a monthly basis, inflation has been rising between say 0.5 and say 0.2%, somewhere in the middle. So let's say at 3.5%, 0.35% over the last 7-8 months. So if inflation has been going up at a monthly rate of 3.5%, that gives you an annual rate of around 4.28%. So I'm just looking at the latest data. You can clearly see that the high end has been 0.5, the low end has been 0.2. So let's say somewhere in the middle, the average 0.35 is an annual rate of 4.28%. So you can clearly see that inflation numbers are a lot better than they have been. And if that's the case, and that's why the market understands that the inflation rate has been coming down, and if so, then the Federal Reserve may not have to raise interest rate that much more. So given that, so that is coming on Wednesday. So that's going to have an impact on the market. So I don't know how the market is going to react or what the actual number is. But the levels I would be watching is the following. So on the S&P 500, so the level is 40 on the downside, which is basically this level right here. So this was the breakout. That would be the level I would be watching. And I would be watching that if this level is breached. This is 40.70. If 40.70 is breached, then the next target would be this level, which is around 40.40. And underneath that, it will be 4,000. So those would be the levels. And on the upside, if this level gets taken out, then I'm looking at, eventually I think 4,200 is doable. The reason why it's doable is because if you look at it consolidated in this range and it broke out to the upside. If you take a full measured move, that gives us this 4,200, which is basically the highs from the February. So I think that's eventually where S&P 500 is going. And once it goes there, it will have a decision to make. Now, in order to better understand S&P 500, let's look at the sectors and what the sectors are telling us. So here the S&P 500 sector breakdown as I have it. This is for the week ending 7th of April. Now, I've got 11 sectors that make up SPY. I've put them into 3 buckets. So this is one bucket, this is another bucket, and this is another bucket. And I have the weights in SPY ETF. For example, technology XLK is the heaviest weighted sector with a weight of 26%. Healthcare is the second heaviest with a weight of 14%. Now, I've put them into 3 buckets. So these buckets where I see rebound opportunities. I mean, if the market is to rebound, I would focus on these sectors. I think these are the sectors where which are likely to put upward pressure in S&P 500. XLK. Now, in last week's video, I mentioned that XLK was a profit taking candidate. I said that there's likelihood of a profit taking in there, and we did some profit taking. As a result, I'm now leaning towards the upside on XLK. This is the heaviest weighted. The other groups are obviously consumer discretionary. Some of the names look interesting, not all of them. So I've got some specific names. I like the retailers. So I think consumer discretionary could also see some oversold bounce. Industrials and materials, they are oversold because they've pulled back. So let's have a look at them quickly. So if I look at them quickly, where are they? So this is XLK. So you can see that XLK, pull back, which I was expecting. So I think there is a opportunity for a bounce. So that's why I would focus on this one. Then the other sectors would be XLY, which is discretionary. So again, this one had a correction pullback. There's some support right here. So there is a possibility of a bounce. So I would be looking at the retailers in that sector. Then two beaten down sectors would be XLI. Now the momentum indicators are not all that positive, but I'm mostly looking at as a bounce possibility. XLB, which is building materials, again they also pull back. You might say that maybe it's searching for a higher low. So I'm also looking for a bounce in this group. So those would be the sectors that I would be focused on, and obviously real estate. Together, it represents 50% of SPY ETF. So if the market goes up, so these four sectors could put some upward pressure on S&P 500. And these other sectors, which equals 37%, I think even though the momentum is strong, like healthcare, I've mentioned the last couple of weeks, healthcare is going to be strong. And because, it has run up so much, I'm basically saying that the risk to reward is not favorable in this group. So let's quickly have a look at some the XLV. So if you look at XLV right here, you can see that it's gone up quite a bit. So do I want to buy right here? No. I want some pullback, and then I would look for long opportunities. Look at the momentum indicators, very strong. So yes, within the context of this uptrend, maybe there is an opportunity for some profit taking, or even if it goes up, I think the risk to reward is not favorable. So this is one area which I would avoid. XLC communication, very strong move. I was expecting some pullback, which we did have, but not enough. So I would say that risk to reward is not looking, that good to me at the moment in this sector. Now again, this is a short-term play. I'm not long-term. The momentum is very strong. Don't get me wrong. But I'm saying within the context of this uptrend, there is an opportunity for maybe a pause or some pullback. Another sector would be XLP. So this is the staples. Again, you can see that strong run up after breaking out of this zone right here. So I would basically not look for long opportunities at this time. Another area which basically had a strong performance has been what was that? So let's have a look at utilities. Yes, so that's another sector that I would basically avoid at the moment. So if you look at the utilities, you can see that from here to here, it's a 10% move. It has broken out of this range, which is which is positive, and I think it can eventually go there. But what I'm thinking is maybe if it pulls back and forms a higher low, so after this maybe you can consider that to be a higher low, and if it does that, then I would be interested in going long on a pullback. So those would be the sectors I would basically be avoiding. I wouldn't be looking for long opportunities. So they total about 37%. So I would say that the net effect is still positive. And finally, the XLF, this is the financial. Now, people have been shying away from the financials only because of the bank crisis and so forth. The group is the momentum is negative, but I'm seeing some improvement. This is a fairly large sector within SPY ETF, representing 13%. The other thing is that the banks will be reporting earnings starting next Friday. So we've got Citi, Wells Fargo, BlackRock, PNC reporting on Friday. And I think investors would want to hear from senior management what the outlook is in this sector. So, and based on that, we might be able to see further reaction either to the upside or downside. But if I quickly look at XLF, you can clearly see that, a big decline right here. You might say, hey, this is bear flagging. Okay, fair enough. I'm not going to argue. But on the other hand, could it also be forming, it also formed a daily higher high and could this be forming a daily higher low? You can see momentum is gradually improving. So this can go either way, and I think so I'm watching this group, and that's why I didn't put them in either of the categories. So if we see positive move in this sector, this is going to put upward pressure. So this 13%, you can add it to 50%, which looks like could move higher at least early next week. So I think overall S&P 500 could see further upward push. These sectors could, I'm not saying that they're gonna fall. I'm saying that they may underperform. So, but overall, net, I see more positive than negative on the sectors, which is why my bias is to the upside, at least on Monday and Tuesday. Wednesday, we have the CPI, and I don't know how the market is going to react. But I would think that if the number comes in at 5.2%, it would be difficult for market. I wouldn't expect a sell-off. I mean, if the CPI comes in at 5.2%, compared to 6%, I mean, how can the market sell off on a number like this? This is a massive drop. So I don't know that, yes, the market could react negatively, initially. Maybe the core number doesn't come in line with expectation. But if the headline number comes in like this way, I would not expect any significant move to the downside. I would be leaning more towards the upside. But again, not across the board. I would be looking at long opportunities in these sectors. So coming back to our analysis of S&P 500, as I said, I'm looking for 4,200, and then the support is 40-40. First at 40-70, and then 40-40. Those would be the levels. For Nasdaq 100, so Nasdaq 100, my upside so that's not Nasdaq 100, so this is Nasdaq 100. My upside target is about this level. What level is this? So this is around 13,400. So that's Nasdaq futures. So if I look at Nasdaq 100, the upside target is around 13,400. I'm looking at the Nasdaq futures only so that you can see how the market reacted to the non-farm payroll report. Now, the relevant numbers for SPY and QQQ are as follows. So for SPY, I'm looking for the February high, a test of the February high, which is around 418. And then for support for S&P SPY would be around 403. For QQQ, let's see, I don't have the targets drawn out here. So let's just do it right now. So if I took the parallel channel and draw it like this way, so it would be somewhere around 330. So that would be the target for QQQ. But overall, it looks like it's more upside than downside, at least early in the week. If we look at the other markets, so let's look at the yield market. So the bond yields actually rose after the non-farm payroll report. You can see this is the 2-year bond yield. It closed around 4%. So it looks like the bond yields can go up a little bit more, possibly to around 420 on the 2-year. The 10-year, if you look at the 10-year, so the 10-year actually bounced off this level. So for if you look at so you can see that these were the previous lows. So it bounced quite strongly. It was up 0.7. It was up 7 basis points. Sorry, this is 30-year. This is the 10-year. This is the 10-year. It was up 10 basis points, 10, 11 basis points. You can see there's a base being formed right here. So on the upside, the target would be around 364 if it gets to that level. So they look like they could go up a little bit, especially especially after the unemployment report. And the other reason why they bounced is because in the last few days, there has been concern of recession. The labor market showed that maybe the recessionary fears could ease a little bit, only because the labor market is quite strong. The report showed two things. One is the labor market is strong, and two, the wage pressures are decreasing, which is a win-win situation, in my opinion, because you do want a healthy labor market if the economy, so that the consumers can continue to spend. So this rebound was due to the fact that perhaps the recession may not be imminent just yet. There was some concern that, based on last week's PMI report, that we might have a recession fairly soon. But the labor market, the labor report showed that no, that may not be the case, and that's why you saw a pickup in yields. And I could clearly see the yields rising a little bit. But if the CPI comes in line with expectation, I would not be expecting a significant move to the upside. Now, what does that mean for dollar? Dollar is kind of oversold. I'm looking to see whether or not there is a bounce. The downside target is to this level, which is not far from where it is right now, but it is kind of oversold. Although I'm not seeing a pickup in momentum, but it is beginning to kind of form a base. You can see RSI has been forming a base. So I'm looking to see if there is a bounce. If so, this would be the area of resistance right here. This was the previous support level, and this is around 103.5. Now, what does that mean for gold? Now, gold is definitely on an uptrend. You can clearly see series of higher lows being formed. But I'm just wondering whether there's an opportunity for some pullback in gold. If dollar rises, then I could see some weakness in gold. I'm beginning to see a divergence forming. You can see prices making higher high, RSI is making higher low. So I'm looking to see whether or not this can pull back a little bit more. Also, if I look at where the moving averages is, it's quite a bit above the moving averages, the daily 20 and 50. So maybe it can come down and possibly touch the moving average. Where is the daily 20? Daily 20 is around 1966. So there's a gap of about 40 points or so. So I could definitely see some consolidation in gold. So that's gold. And in terms of oil, so oil is basically consolidating. You can see that after a big run up, it's been basically going sideways. The momentum indicators have started to move higher. So this is looking more positive than negative. So this is on a daily basis. On a weekly basis, if I look at it, I'm not seeing a momentum indicators. If you look at RSI, you can see RSI, this has been a resistance zone, RSI 50 level. It closed just above 50. So I just want to see whether it can hold on to the 50 level on a weekly basis or whether it's going to pull back. So there are some improving signs in oil. Definitely so on a daily basis. So this is a resistance zone right here. So if this level gets taken out on oil right here, then we might be looking at this zone right here. So this level would be around upper 80s, 87, 88 area. So this level right here. Now, obviously, it needs to get through this area, which is around 85. So this would be the two levels I would be focusing on, right here and then right here. So this is around 85, and this is around 89. So this is around 85. Yes, it's around 85, and this is around 89. So those would be the levels I would be focused on. Just to summarize, on major averages, S&P 500, I'm positive on S&P 500. These are the levels to watch. But the sector that I'm more excited or paying attention would be the small cap Russell 2000. It reacted positively. I want to see if there's a follow through. If so, I will be looking at long opportunities there. Dollar is, momentum is weak but oversold. So look for some kind of a bounce. which means that the opposite is likely to happen on euro and sterling. On the bond yields, they reacted positively. I could see bond yields rising a little bit more. VIX is at an oversold level, so definitely there is opportunity for a bounce in VIX. In terms of the sectors, so my view is that I would be looking for long opportunities in these sectors: technology, consumer, discretionary, real estate, materials. I would avoid these sectors at least next week: healthcare, communication, energy, utilities. And the wild card is financials, because they're oversold. Everyone's like wondering, hey, do we want to get in, or is there more to come? So, people are undecided. And next Friday we have the earnings coming out, and that will provide some clarity. So this is a wild card in there. So that's all what I want to say. Now, I do want to mention that I do provide updates during market hours through my Twitter account. So feel free to follow me. The link is in the description. Other than that, I thank you very much for watching the video. Please consider subscribing if you haven't done so, sharing, liking, all that good stuff. And I hope to see you again in a future video. Thank you very much.